Good morning, good afternoon, good evening. No clue what time you're watching this, but it is 7:46 a.m. over there on the East Coast, 7:46 p.m. Both are Sunday. I'm 12 hours ahead of the East Coast until you guys do your daylight savings time, and we are looking at the week ending July 18th. This is OPEX week, so it's not quad OPEX like what we had in June. Those are March, June, September, and December. But it is OPEX week, and OPEX does have a little bit of a, press on how options do trade on the indexes. And it is as well earnings season. Earnings season kicks off. So I hope you enjoyed what I have started you out with your screenshot there. And yes, earnings begin Tuesday. JP Morgan, Citibank, Wells Fargo. Very odd because typically these begin on the Friday, but it is what it is, so we leave it at that. A little bit of background noise happening because, the kids, they're having a ball. They just got their roasted chicken. But yeah, anyway, earnings start off on Tuesday. JP Morgan, Citibank, Wells Fargo, BlackRock. After that, Tuesday afternoon, nothing. Wednesday morning, ASML, Bank of America, Goldman Sachs, Johnson Johnson, Morgan Stanley. United Airlines reporting there after the close on Wednesday, and a lot of people are running over to the airlines now because of what happened with Delta a couple days ago. Look, if you want to go chase individuals' names, you tell me what they are. I've already got them charted. More than happy to share the chart and the view with you. I simply follow what I see is liquid and has a little bit of, reliable volatility. Easy to look at the pricing on. Once in a while, yeah, I will go over to those guys. As you guys know, I bought American Airlines when they were bankrupt and made a little bit better than 13,000% on the stock. So, Taiwan Semiconductor there on Thursday, Pepsi, Cintas, Netflix is the big one after the close on Thursday. And let me just tell you, if you want to jump in front of the Netflix train, be my guest. I refuse to trade it anymore. It is way too overvalued on a number of different reasons for me, but we'll leave it at that. So anyway, over the weekend on Friday, also on Saturday, I hope you enjoyed your full moon. Your full moon is in July 11th. And so that we all know this, I'm going to fast forward a little bit. Today, July 13th, is the Fibonacci spiral date. Like I shared, originally, when this started, brand new to this Fibonacci spiral, absolutely amazed at the accuracy of it. And as I shared last week, a couple of weeks prior, as you start getting into these further extended dates, how May 19th, which was the actual top, 59.68.61, 89 days since February 19th. 144 is where we are now with July 13th. 233 on October 10. As you start getting to these wider dates, you tend to lose, or you notice on other ones which are deadly accurate as well, the synchronicity, high, low, high, low, high, low, high, low. We were due to be expecting that 59.68.61 was the high and July 13th would be the low, but we never had that seasonality that I shared with you. Looking back firstly at May 21 watch, go 2 months now, 2 months ago, and back then, like I shared, as long as SPX holds above 56.65, there should be nothing to be worried about. The Wave 5 bounce to all-time highs or higher into June, July to produce. See my video on March 14th if you don't believe that, where I talked about new all-time highs would be coming in. Going back to last week, again, like I shared, which I'll scroll down here on, as we were looking at that 62.45.37 really fits. We broke above that last week, or the week prior. 63.40, 63.35 calls for July 11th. Easy no-brainer, dollar. You want the risk, 62.55, 62.50, 250. Then they were $3. Then they were $3.50 as we posted the new all-time highs over there on Thursday. They were $1.50. $1.50 Friday morning. Everybody had a chance to make money on it, and if you did not because you couldn't log into your Thinkorswim, I have been listed on the class action lawsuit with Charles Schwab because the trade that I gave, which was a profitable trade of risk, was not able to be closed by a number of people because they weren't able to log into their Thinkorswim for whatever technical difficulties it was on Thinkorswim. But the trade worked. So did the 63.40, 63.35s with no stress whatsoever. But anyway, coming down, why I'm here is the seasonality. Seasonality. You can go onto this website, SeasonX. Do your own research. Look at however many years you want. Look at different kinds of years. SeasonX, the June dip, we never, ever got. We never got that June dip. World War III ended 20 days ago. The September, July high, August high, down into that September, October low. That's where we're at. Odd years. We're right there. July, down into that September, October low. Come over onto COVID. July high, September high, August high, down into that September, October low. That June swoon, didn't get it. And again, looking at it since Trump, that June swoon, didn't get it. And then you have that August into October since Donald Trump. This is again talking about since Trump in 2016, which is again why I'm saying to limit your expectations to nothing greater than a 3% dip. Only because that is what we are pretty much trained into already. And when you come out, and I'll get to that in a couple seconds, but when you come over and you look at your daily charts and you see that you have these running sell divergences on your daily on the RSI, your money flow peaked back in June. Your money flow has just been flowing out since the beginning of July, still going up. You come over onto your NDX, your NASDAQ, 100, same thing. Peaked at the end of June, been flowing out since, still have a sell divergence that is peaked, triple topped over here on your RSI on the daily. Same thing on the IWM, same thing over there on the Dow Jones. So timing, your full moon, your Fibonacci spiral, where we have hit as far as a number when it comes to our Fibonacci extensions, and bring it on to 3 green weeks in a row, with last week not even being up 1 point, not even being able to break 90 points for a range. One thing I will bring you into as far as being very, very, very well aware of. Monday is going to be 13 trading sessions since we have had a plus 1% day. The plus 1% day came shortly after World War III ended. World War III ended over there on June 23, and then you had the ceasefire agreement on June 24 that Iran completely finished, no more, poof, skyrocket. Makes absolutely no fucking sense whatsoever, but that's what we had. Coming off of the May 19th, perfect 59.68.61 with that Fibonacci spiral high. 57.67, that was where our bottom was. We have been there for now going on to 2 months at the end of this week since that 57.67.41. And that is the most significant and most important downside pivot to be aware of. 13 trading sessions. So, trying to forecast the future, what I can visually see with, right now, the Dow futures down 200 points, 0.5%, is a very high probability that we could get a minus 1% drop down here, down below 6,200. And then because we have that minus 1% drop, and we will be oversold on our shorter time frames because we have been trolling in this 6220 area for the better part of a week, easy to get your 1% move to clear that off because it has been 13 trading sessions. So Tuesday would be 14 trading sessions. And that's the same number that we had going into where we didn't have a minus 1% trading session, which was last week, Monday. So bring that all back into, we're done with that, we're done with the full moon, we're done with the earnings talk, and now we come on to the QQQ. The QQQ, again, just like the SPX, 3 green weeks in a row, less than 1 point up last week. Less than 1 point. IWM, 3 green weeks in a row, not even a quarter of a point up last week. So again, with the new highs being hit over there on Thursday, 226.05, recalculating the plus 31.63% bounce, 54.32 points, a minus 3% move would be down at 216.63. Same thing on the QQQ, because it hit 557 there on Thursday, 557.30, 10 cents higher than where it was the day before 4th of July. So a recalculation of where your minus 3% drop is, as you can see over here on the right, which everybody can do on their own spreadsheet, minus 3% would bring you to 540.90. Minus 5, 529.75. These are simply numbers. Depends on what the chart looks like. But there again, what you have coming here on Wednesday is CPI. So on Wednesday, you have the CPI report. You just had your full moon, your Fibonacci spiral, and more importantly, where are we? I think we're done with all of the clips that I'm going to show on here, other than this. What I shared for you there on Friday to try and emphasize, dude, why are you forcing Fridays, man? Go enjoy your life. 2 green weeks in a row. All the weekend gaps are filled. We're inside the full moon plus 3 minus window. July 13th will forever be the Fibonacci spiral date. So blah, 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 blah. Talking about all of this bullish talk, which we're going to continue to talk about today. Blah, 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 blah. The ES. Coming off of COVID, with the COVID lows being where we start. The 1 being the 2022 highs, the 2 being the 2022 lows. The 1, 2, 3 makes for a perfect 5 waves to the upside. 1, 2, 3, 4, 5 as far as we started from the 2022 lows. It fits. It all fits. The 200 extension of where the 1, 2 extension is, coming off of the 2022 lows, into the July 2023 highs, down into where Israel invaded Gaza in October of 2023, right there at the 200 extension at 63.8725, off by 50 points. It fits. NQ, same exact thing. Big bang, come down here onto that big bottom there in in 2022. Then your move to the upside coming off of that being a 1, 2, 3, 4, and a 5. It fits. It simply fits. That's it. Dow Jones, can't say the same thing over and over, but why not? The 1, 2 coming off the 2022 lows into the July highs of 2023, into the October 2023 Israel invades Gaza bottom. 1, 2, 3, 4, 5. 1, 2, 3, 4, and here is your 5. Double topping, triple topping, right at that same number there at 45,073. Russell 2000, 1, 2, bearish C-wave view. I got a different view over here on the Russell 2000, but by all means, do what you want to do with it. It is what it is. But as you can see, and I'll share with you on a chart looking at it, as you come up here to this 226 area, 227 on your IWM, you can clearly see you ain't getting much up there above that, so you have pretty much run your gauntlet with where you are, and with this being a 5 and an A and a B, the C wave, at least wave 3, if this is going to be a 1, 2, 3, 4, 5 for the C wave, should take us down below where our bottom was back in 2024. You're pushing it. If you're going out there, all you're looking at right now is this little area where we've been over the last 15, 20, 30 days, because you're going to get oversold if you're going to dip down there anyway. So, okay, we are officially done with that. So let's take a little break, and we'll move on to what we're going with.
Can I get a? Can I get a? Running her hair through my fro. Yeah, bouncing on 24. Come on.
So, the same SPY, the same SPY, the same SPY chart, the same SPY chart. Coming off the bottom there in April, 1, 2, 3, 4, 5, boom, boom, boom. with this being the bullish wave 1 completed. Now the bullish wave 2 to make a dip to the downside should be somewhere in the 560, 570. Bullish, okay? Bullish. And then the big, long wave 3, which lasts throughout the year, into next year, into next summer for your big, actually, it'll go until February, March of next year. That being your wave 3. Your wave 3 of your big bullish, finalized, everything is over with. Throw everybody, go buy one of those bunkers over there in Australia that all the fucking billionaires have for nuclear war. That's where you get after you get up there a couple, call it 12 months from now. So that's your bullish view. That's what we're sticking with, is the bullish view. We've not changed anything from the bullish view. Over on the SPX, again, looking to track how we have come from that, World War III ending back on June 23. 1, 2, 3, 4, 5. Boom, 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 boom. All of it fits. Zoom out. It all fits. Yes, can we go and hit 63.32? Another 35 points to the upside. Yes, absolutely, yes, we can. Does it fit? Yes, it fits. Fits perfectly. That extra 40 points to the upside. Come on, man, we got to have it. But that's what you're looking at for your upside. Same thing as you can see here. We lost out on the volatility from the May 19th high. After May 19th, when we had that 57.67 back on February 23 or May 23, we've completely lost any volatility. This has just been a shitbox grind to the upside. It's been terrible. But this is what we're looking at as a bullish wave 1 for the bullish wave 2, which shouldn't dip any much lower than that 57.75 and the exact same 56.65 that we talked about way back in May when we were talking about the bullish downside support level. Come on to the daily view of what I use for when I'm watching this on the 0 DTE. Coming off of, again, going back here to May 30th, which is a little bit further than I wanted to go, but it's 30 days. Little gap, little gap, little gap, little tiny gap, another big gap. This is your big gap, your big gap, big gap down here, big gap down here, down below 58.81 where you closed in last year. Well below the 50-day moving average, which we gapped up above. Same like the 200-day moving average that we gapped up above. And where we are here is plus 30% from the 48.35 lows. Plus 25% from the 48.35 lows is down here at 60.43. Plus 20% from the 48.35 lows is down there at 58.02. We'll see when we see. But looking back at this from that, yes, this fits. World War III ending. It's just been a grind. Like I shared with you before, using your 5-day moving average just to see it, we never, ever once came close to that 5-day moving average, which was why when we got our first little dip, the 5-day moving average mattered. 5-day moving average continued to matter. And as you saw there on Friday, your 5-day moving average, which we'll go ahead and remove here, the 10-day, the 20-day, the 50-day, and we'll leave the moving, your 5-day moving average held all day long. You got your little gap down, your dip, boom, boom, here you are, $1.50 over on your 62.55, 62.50s, and then your 5-day moving average held all day. These things matter. You got to have them on your charts. But again, coming back into this from a big, broad, wide view, and I'll look at it from a 30-day view, which I think is matching. Is this matching? No. 15 days. 15 days since World War III ended. Since World War III ended, back when, Iran got bombed, and here's your VIX. As very clearly talked about that 2102 being the end of any downside. We've talked about that over and over and over and over again. You gap down when world peace took place, ceasefire. And here we've been trolling in this 1622, 1811, 1622, 1706. Why is your VIX so high? Bring it out here into a default view, which is a little bit clearer for you to be able to see. Why is your VIX so high? Why are we up here in the 16s? Why aren't we pushing down here into the 1450s? Why aren't we pushing down below 1450? Why didn't this just slam down into the 1450s? Because something is happening down there in the background. QQQ. Zoomed in view. Coming out here off of your World War III ending at 523. Boom. 557. Wider view. Where can it go? Absolutely. 555.57, perfect fit for the 123.6 extension, which comes off of your COVID lows to your 2021 highs down to your 2022 lows. Perfect fit for a textbook wave 3. Perfect fit. Textbook wave 3. That's where you're at. Come out here and look at it from another point of view, which is what we've been looking at using my gaps chart. From the bottom there, 1, 2, 3. Where is 3? 3 fits right here at the 200 extension at 558.81. 2 fits right here, or 3 fits right here at that, where is this? 558.708 coming off of the 2022, the 2023, and the 2021, the Israel invades Gaza bottom. Come out there again, right up there on the top, and you're looking at your Fibonacci retracement of the big drop back there in December into the January bottom. Come over here and look at your 553 here, and we're looking at the drop back in July to August, right here at 553. Everything converges right here. And when we were trying to figure out where is this thing going to bottom at, where is this thing going to top out at? There's your ending of World War III, your wave 4 of wave 3 low. And we had an AB, 1, 2, 3, 4, 5. Fits right there, 559.04. Would be a perfect fit. And you have no gaps until you get down below 540. More importantly, which I'm going to bring you back to as we finish off here, with the Dow Jones, completely unchanged. 1, 2, 3, 3 times right here at 450, 3 times at 450. You want to tell me that you're going to go to 460? I won't disagree with you. I hope that it really works out for you. I really hope it works out for you. Coming off of your bottom over here in April, 1, 2, boom, 161.8 right here at 445.82. You can't. I mean, you couldn't. Picasso couldn't fucking draw this any better than it's already drawn out by itself. And here on your IWM, like I shared on the Russell 2000 view, to zoom you out a little bit, come over here to your 226.82 and your 221.41, and here you are back in July of 2024. Here you are again back in September. Here you are in October. Then your big gap up after Donald Trump won, which is the way that you got up here back to your old all-time highs, and then right back down to it, as you already know, because this was selling off from back in Thanksgiving all the way until April. How many months is that? 4, 1, 5 months. 5 months of selling off on the IWM. So to get a bounce back up here, back to the old resistance, after it gapped up above the 200-day moving average, nothing special. Nothing special whatsoever. So you're wanting to watch that 221 short-term, 217 wider view, and stick above the 210s if you're going to go shopping for something big, broad, and wide. So anyway, here on SPY, I think this is clean. Yeah, it's pretty clean. Yeah. So, yeah, there you go. Your 1, your 2, and where do you come out to for your wave 1? Right there, 609.83, which is why I really thought it would work, thought it would be perfect. To go up a little bit higher to get that perfect little 123.6. You're looking at 671, with 658 being right up above there, and you've already come to your 626.23, which, if you want to know where is 626.23 coming from, well, that's right there. That is your wave 1 coming off of your big bottom over there in 2009, down into your wave 2, which all took place there at COVID, 1, 2, boom, boom, That's what I'm looking at here on this chart. Not going to argue with anybody about different drawings. It's what I'm looking at. And you come right here to your 150 extension, 620, 623. So again, we're looking for this wave 3 to be topped. That was your wave 4 is what we're calling it. We're calling it wave 4 right now. Okay. And then where we come off, that's what we're calling this. And what we have here is we have R1, we have R2, and we will go ahead and duplicate this just to make it very visually oriented for those that are not able to see this. And that is what this is calling for. I am not calling this, but this is what this is calling for. So, and there you go. For this to be heading up into the 700s, into the 750s after we have this dip, and that was where 700, 750s when you go into February of next year. So that's your bigger, broader, wider view. But one thing I will bring you back into, once again, to a 90-day. 90 days should be more than enough. It's actually too much. Give us a second here to move this in real time, and we will go to the 30-day. Does not fit. We will need to go to the 90-day and then zoom in. Because right here, right after February, on May 27th, you got your fake print, and your fake print is here at 578.43. Fake print's a fake print. It is what it is. So 578.43 for the wave 2 downside. I can see it. Let's see what happens. But anyway, guys, one-on-one calls, I'll be doing them for the better part of July and August, and as we go into the beginning of September. Saturdays, 7 o'clock, 8 o'clock, and 9 o'clock a.m. Eastern Time. Those will be the 3 slots each weekend that I'll do. Saturday, 7 a.m., Saturday, 8 a.m., Saturday, 9 a.m. No changes on that schedule, no alterations whatsoever. I live in paradise. I'm not going to give it up. So I leave you with the reality of what we have in front of us.
Mr. President, the other day a reporter asked you about Ghislaine Maxwell. You said, quote, "I just wish her well, frankly. I've met her numerous times over the years, especially since I lived in Palm Beach, but I wish her well, whatever it is." Mr. President, Ghislaine Maxwell has been arrested on allegations of child sex trafficking. Why would you wish such a person well?
First of all, I don't know that, but I do know that
She has. She's been arrested for that. You know
her
that.
friend or boyfriend
Epstein.
was either killed or committed suicide in jail. She's now in jail. Yeah, I wish her well. I'd wish you well. I'd wish a lot of people well. Good luck. Let them prove somebody was guilty. I mean, do you know that
Oh,
she's
so you're
guilty?
saying you hope she doesn't die in jail? Is that what you mean by wish her well?
Her boyfriend died in jail, and people are still trying to figure out, how did it happen? Was it suicide? Was he killed? And I do wish her well. I'm not looking for anything bad for her. I'm not looking bad for anybody. And they took that and
I mean,
they
she's
made
a
it
child
such,
sex, alleged child
such
sex
a
trafficker.
big deal. But all it is her boyfriend died. He died in jail. Was he killed? Was it suicide? I do. I wish her well.